Yes, I call that. I'd signed on somewhere else before.
Good evening, class. Good evening.
Good evening, sir.
Where did we stop the last time?
Oh, yeah.
Yeah, where did we stop? The last class we had. So where do we stop?
Oh, yeah.
Have we discussed tax evasion and tax avoidance? Eh?
No, sir.
Have we discussed tax evasion and tax avoidance? Hello, class.
No.
Okay, this night, let's look at tax evasion, tax avoidance. What do you say? Let's look at tax avoidance and tax evasion. What is tax avoidance? Tax avoidance arises in a situation whereby taxpayers arrange his or her financial affair in a form that will give rise to the least possible amount of tax payable. What tax avoidance simply means is the process of identifying the loopholes in the tax law and take advantage of that loopholes. Huh? Hello?
Can you send to the platform, please?
Hello?
Hello, can you send to the platform, please?
Hello, sir. We're saying that
The process of identifying.
Can you please send the material to the platform, the WhatsApp group?
Check your WhatsApp group. I've sent the material earlier. I've sent the material about 2 weeks ago. Tax avoidance means the process of identifying the loopholes in the tax law and take advantage of the loopholes in order to minimize your tax liability. What that one means is tax avoidance means the legal act of reducing your tax liability without contravention of tax law. The legal act of reducing your tax liability without contravention of the tax law. That is tax avoidance. That is tax avoidance. The legal acts that you use to reduce your tax liability within the limit of law or as permitted by the law. That is tax avoidance. Tax evasion means deliberate acts or illegal act of not paying tax. Tax evasion simply means deliberate act or illegal means of not paying tax. What this one means is, in tax evasion, you manipulate your account, you manipulate your record. In tax evasion, you manipulate your account, you manipulate your record in order to not to pay tax or to reduce your tax liability. So tax avoidance is legal way that you by taking advantage of loopholes in the tax law to minimize your tax liability. But in the case of tax evasion, you deliberate or you engage in illegal malpractice to conceal your income, to understate your income, to overstate your expenses with the aims of not paying tax or paying minimum tax, reducing your tax. So that is meaning of tax evasion and tax avoidance. Now, what are the differences between tax evasion and tax avoidance? What are the differences between tax evasion and tax avoidance? Number one difference is in terms of the meaning. In terms of the meaning, tax evasion, tax avoidance simply means you are minimizing your tax liability without violation of the tax law. But tax evasion means you are reducing your tax liability using illegal ways. That is number one difference. Number two differences, we look at it in terms of payment of tax. Tax avoidance means hedging of tax, while tax evasion means concealment of tax. Hedging of tax and concealment of tax. Tax avoidance, you are hedging of tax. Hedging means you are deferred tax. You defer your tax. You defer your tax. You defer your tax in tax avoidance. But in tax evasion, you don't want to pay tax at all. In tax avoidance, the tax you don't pay today, you are still going to pay it in the future. You hedge it to the future period where you have enough cash flow. But in tax evasion, you conceal your information with the aims of not paying tax. Another difference is tax avoidance is legal, while tax evasion is illegal. Another difference is in terms of the consequence. Tax avoidance can result into deferment of tax liability, tax avoidance is not punishable under the law, but tax evasion may result into payment of penalties and interest, or in some cases, imprisonment. The end result of tax avoidance is deferment of tax liability, while the end result of tax evasion is penalties and interest or imprisonment. Type of the acts I've said, tax avoidance is legal, while tax evasion tax avoidance occur at the beginning of the period, while tax evasion occurred at the end of the period. It is after you have made your income, you have made a lot of profit, that you'll be thinking of how to practice tax evasion. But in the case of tax avoidance, before you even start doing business, you will have planned on how to avoid tax before you even start doing. So that means tax avoidance occur before the tax liability will be determined. But tax evasion occurred after the tax liability has been determined. When you discover that you are going to pay a lot of tax at the end of the financial year, you will now be looking for what way can our company evade this tax? How can we minimize this tax? Let's reduce our income. Let's increase our expenses. So those are the difference between tax evasion and tax avoidance. In my number one difference, I look at the meaning, I look at the payment of tax, I look at another difference, I look at the legal type of the acts. I also look at the consequence. I also look at the time or period of the act. What period does tax avoidance happen? What period does tax evasion happen? So those are the difference between tax evasion and tax avoidance. Now, let's look at what are the reasons why company practice tax avoidance and tax evasion. What are the reasons why will a company engage in tax avoidance or tax evasion? What are the reasons? Number one reason why company engage in tax evasion and tax avoidance in Nigeria. Number one is absence of compensation from the government. The average Nigerian believe that they are paying tax every year. What does government use to compensate us from this paying of tax? There is no good road, no good electricity. We don't have stable electricity. We don't have adequate security system. Good healthcare service, we don't have. So absence of compensation. So average Nigeria believe that, why am I going to pay tax since there is no exchange consideration from this tax I'm paying? Government does not provide value from this tax. I did not receive any value from government as a citizen from this tax I'm paying. Another reason for tax evasion and avoidance, another reason, mismanagement of funds realized from tax remittance. Mismanagement of what? Fund realized from tax remittance. Some people also believe that this money that government is collecting from tax, at the end of the day, they mismanage it. They will use it to buy private jets. They will share it in the National Assembly. They will just spend it recklessly. So, based on that regard, there's no reason why I should pay tax. So, some people believe like that because government mismanage the tax revenue. Another reason is lack of knowledge of civil responsibility. The citizens that are not paying tax, they are not well informed on their responsibility. As a citizen of Nigeria, if you are deriving an income, it is part of your civil responsibility to pay tax. But people are not aware. Some people are not aware that payment of tax is part of their civil responsibility as a citizen. Some people are not aware that if you don't pay tax, it's against the law, that person can be punished. The third tax is optional. So that is another reason for tax evasion and, and tax avoidance. Another reason for tax evasion and tax avoidance is legality of tax avoidance. Legality of tax avoidance. Since tax avoidance is legal, people would like to take advantage of it. Company, they would like to take advantage of it. Since they know that this tax avoidance is legal, they would like to take advantage of it. Because they believe it's not against the law. So those are the reasons for tax avoidance and tax evasion. Now, let's look at the ways in which a taxpayer can practice tax avoidance. What are the ways of tax avoidance? What way, if you want to do tax avoidance, what are the system, what are the policy you are going to adopt in practicing that tax avoidance? Number one is purchase of qualified capital expenditure. When you acquire or you purchase QCE, qualified capital expenditure, like land and building, plant and machinery, furniture and fitting, when you purchase all that, you have the aims of what? Of claiming what? If you purchase plant and machinery, furniture and fitting, land and building,
allowance.
What allowance do you claim to reduce your tax?
Capital allowance.
Capital allowance. Capital allowance. So, by purchasing qualified capital expenditure, QCE, you will claim capital allowance. And capital allowance will reduce your what? Tax liability. Another one, contribution to approved pension scheme and National Housing Fund. Contribution to what? Approved pension scheme and National what? Housing Fund. When you contribute to pension, you contribute to pension from your salary, or you contribute to NHF from your salary. Pension and NHF under personal income tax, what do we call them? Pension. If you want to compute personal income tax, pension and NHF, what do we call them? Who can remind me?
They are reliefs.
I can't hear you.
I said they are reliefs. They are allowable deduction.
They are tax exempt. Under personal income tax, pension, NHF, life assurance policy, national health insurance scheme, they are all called tax exempt. And those tax exempt, we use them to, what do you think? They are tax exempt, and those tax exempt, we use them to reduce personal income tax. Secondly, if a company paid NHF or a company pay pension, pension is an allowable expenses. It will use to reduce company profit and tax liability. Another ways of tax evasion, tax avoidance is donation to approved what? Body. Donation to approved body as listed in the 7th schedule of CETA. There are some organizations we can donate to that is allowed. There are some organizations we can donate to that is allowed. Under your company income tax, there is a condition for donation. Who can tell me the condition for donation? What are those conditions that must be attained before you can donate? It is under our company income tax. I'm sure we will have talk about that.
It must be donation to approved body.
Okay.
And it is restricted to 10% of accessible profit.
Okay. It must be out of profit. It must be charitable in nature. What are those approved bodies that we can donate to? What are those approved bodies that we can donate to? Public university, public institution, they are approved bodies. Teaching hospitals, they are approved bodies. So those are the another ways of tax avoidance is payment of reimbursable expenses to staff. Payment of what? Reimbursable expenses to staff. So some staff, you said you pay reimbursable expenses to them. So another one is claiming of excessive interest on loan. If you want to do tax avoidance, maybe you have an associate company or you have a subsidiary company. You want to reduce the tax of your subsidiary. You don't want your subsidiary to pay too much tax. What you can do, you the parent, you can borrow your subsidiary a loan. When you borrow them a loan, that loan that you borrow them, every year the subsidiary will be paying interest on the loan. that interest on the loan is an allowable expenses on the subsidiary account. So that means it will reduce the tax liability. It's a means of tax avoidance. Some company, their parent is outside Nigeria. The parent of a subsidiary in Nigeria that's located in Nigeria, the parent may be outside Nigeria. So they will be giving loan to the subsidiary in Nigeria. The aims of giving that loan is not that that subsidiary needs the loan. That loan given to the subsidiary may be in the subsidiary bank statement, it may be idle capital. They may not use it for anything. But the intention of giving that loan is to ensure that the subsidiary do not pay tax, do not pay too much of tax, to minimize the subsidiary tax in Nigeria. Another one is investment in government security. Investment in government security. When you invest in government security, what are the government security we have? Who can give me an example of government security? Treasury bill, bond, development stock, treasury certificate. You know, when you invest in this, all this government security, what is the reward? What is the reward of reinvesting in this government security?
Dividend.
Tax exempt.
Interest. You will collect interest. They pay interest. They don't pay dividend. It's interest. All those interest on treasury bill, interest on bond, interest on development stock, is it taxable income or non-taxable income?
Non-taxable.
It is non-taxable. You will not pay tax on them. It's a way of tax avoidance. Now, we have looked at the ways in which we can practice tax avoidance. Let's look at the way in which we can be guilty of tax evasion. We cannot practice tax evasion. It's guilty because tax evasion is illegal. We cannot practice it. We will be charged, or we will be charged for engaging in tax evasion. So we will be guilty of it. What are the ways? Number one, refusing to register with relevant tax authority. You are a company, you started a business, you have not even registered with tax authority. You don't have tax identification number. You don't have tax identification number. You don't bother to go to tax office nearer to your office to go and register that you have commenced a business, so that you will be paying VAT every month, so that at the end of the year you will pay your company income tax. You are not bothered. That one is an evasion. It's illegal. It's criminal. Failure to furnish a return or statement or information or keep record required. When tax authority asks for a report from you about your tax status, you fail to provide that. Every month, you fail to file VAT return. What is the timeline for filing VAT return? Timeline for filing VAT return.
21st of the subsequent month.
21st of the subsequent month. 21st of the following month of the transaction. Let's use it like that. The month of the transaction, 21st of the following month of the transaction. The month that followed the month of the transaction. So another ways of tax evasion is when you file incorrect return. or you understate your income. It's a tax evasion. Overstating of your expenses, transport and traveling in your account is supposed to be 100,000, it's supposed to be 3 million. You put it 30 million so that your profit will reduce. You know, when your profit reduce, your tax will reduce. Because a company, the tax a company paid, company income tax, education tax, is based on profit. So overstating expenses is an evasion. You don't incur. You are claiming that you incur it. It's an evasion. Entering into artificial transaction. You enter into artificial transaction. What is artificial transaction? You deliberately go and print a receipt. And that receipt belongs to the company of your wife. You are the owner of a company. And your wife too has his own business. You now deliberately bring a receipt that your wife render one service to you. He render consultancy service to you. Or he sell one good to you. And it does not, that good or services does not have substance over form. It's an artificial transaction. Planned transaction. Transaction that is not done as at arm's length. So those are the ways of tax evasion. We have looked at the way we can practice tax avoidance. We have looked at the way we can be guilty of tax evasion. Now, let's look at the measure put in place by government to curb tax evasion. What measure government so far? Mind you, we cannot eradicate tax evasion. Tax authority cannot eradicate tax evasion. What they can do is to do what? Is to minimize tax evasion. Minimize. We cannot say we will have, even in the UK, in America, that they have, that everything is well organized. There is still tax evasion. Some people are still being charged for engaging in tax evasion. Talk less of Nigeria. So we cannot eradicate tax evasion. We can only put a measure that can reduce it. We can reduce it to some extent. Tax evasion is a virus that go with tax. There's no how we can say, in computer, when you are using a software, there must be a virus. If there is no virus, most of the companies selling antivirus software will not sell antivirus software. They are the one even creating the virus in the long run so that they can sell their products. So we cannot eradicate tax evasion. We can only minimize it. What are the ways? What are the measures so far government, tax authority have put in place to curb? That curb means to minimize tax evasion. That word curb means to minimize it or to control it. Number one measure is the use of tax clearance certificate for government contracts. The use of what? Tax clearance certificate for government contract. If any company want to bid for government contract, under the tender requirement, tax clearance certificate will be the first requirement. You want to apply for government contract, you have to show us your tax clearance certificate. And we know the meaning of tax clearance certificate. The document, tax clearance certificate is a document issued to the taxpayer by the tax authority, serving to serve as an evidence that all the tax obligation and tax due during a relevant year of assessment have been fully paid or comply with. So if government want to give out contract, they will tell company that want to bid for their contract, you have to have what? Tax clearance certificate. By requesting that, it has made so many companies that are looking for government contract to go and be paying tax, because one of the good contract people, most of company that they would like to collect is government contracts. So they would like to comply with tax, they will go and pay their tax. Because of what? Though if they pay the tax, they may not pay the full tax. They may pay, they may manipulate their record to just pay a little tax, but they will still pay tax so that they can collect tax clearance certificates. Another measure is stipulated penalties. We introduce penalties. Stipulated penalties simply means we introduce what? Penalties. Anytime you don't pay tax or you fail to file return at the due date, you will pay penalties and interest. That penalties and interest, government introduce it so that people will not be engaging in tax evasion. Because people will see that this tax, how much is this tax I want to pay? If I don't pay, if government is aware, so stipulated penalties is one of the measures. Another measures is introduction of withholding tax deduction on some transaction. Some of the income that some people earn for providing service or for selling good, for supplying some goods, they will attract what? Withholding tax. Withholding tax is an anti-tax evasion policy. It is used to reduce tax evasion. How? If for rendering service to you, if you want to pay me professional fee, assuming the professional fee is 100,000, the law said you should deduct withholding tax of 5%. 5% of 100,000, 5,000. That means out of 100,000, you will deduct 5,000. The net is 95,000. Me that want to receive that income is the net I will receive. 95,000. I will not receive the 100,000. That 5,000, you go and remit it to government as withholding tax on the income earner name, on the receiver name. That withholding tax, we want to use it to reduce tax evasion. At all, withholding tax simply means at all na impact. What that one means is that at least government will still collect some little tax. Because That income that government deduct withholding tax on, the receiver of the income at the end of the year may not disclose the income to government, if or may not pay tax on the income. But since government has deduct withholding tax, that means government has collect some little tax. It's still okay than giving that person 100,000, that at the end of the year he will not go and pay tax on that 100,000, or he will not even disclose that he earned 100,000. So it's a measure put in place to curb tax evasion. Another measure put in place to curb tax evasion, tax education. We need to be educating the taxpayer the reason why they should be paying tax. What are the importance of tax? What are the benefits that they deem to be derived from tax? We need to educate them. We sensitize them. We tell them the importance that if you pay tax, so in the long run, government will use this money to construct road. Government will use this money to provide security for you. Government will use this money to build more public school so that your children can go to public school, public university. We sensitize them. We tell them that for you not paying tax is illegal if you are caught for not paying tax. So they make an announcement, publication. Tax education is a measure to curb tax evasion. Another one, tax audit and investigation. Tax audit and investigation. What this one means is that every year, government will be doing tax audits on your tax return that you submit to them, to the tax authority, so that they can checkmate whether that tax return is correct or wrong. The reason why they are doing this tax audit and investigation is to curb tax evasion. If any company has engaged in tax evasion, in the course of tax audit and investigation, tax authority can discover such tax evasion engaged by the company. So as a result of that, some company they don't like engaging in tax evasion, because they believe that in the long run, if tax authority come for audit, if they discover, we're still going to pay more. Because at the end of the day, if they discover that you engage in tax evasion during the tax audit, you will pay the tax that you evade. You also pay penalties, you pay interest. That means, assuming you're supposed to pay 1,000, if FRS now discover, you will pay the 1,000, you pay penalty. That penalty may be 2,000, you pay interest. That interest will be 1,000, you pay more, instead of you paying 4,500. Instead of you paying 4,500, instead of you paying 1,000, in the long run, you will pay 4,500. So tax audit and investigation is one of the measures to curb tax evasion. Another measure is establishment of intelligence unit. FRS or tax authority, you have a unit that is called intelligence unit. This intelligence unit will be the one to gather the database of or information of taxpayer, so that they can checkmate whether taxpayer is engaging in tax evasion or whether they are engaging in tax malpractice. Introduction of TIN. Introduction of what? TIN. TIN means TIN, tax identification number. Is a unique number assigned to the taxpayer by the tax authority as part of process of registration for tax. If you want to pay tax, you use your TIN to pay as a taxpayer. You don't use your company name to pay, it's your TIN number. So TIN number is a measure that is used to curb tax evasion. They introduce TIN. Why? They will say, okay, if you want to open bank account as a company, if you want to open current bank account, you must have a TIN number. That is what they are doing now. That TIN number now, if you are conversant with update on tax, as at this morning, or as at this morning, there was an interview by the chairman of tax reform committee. He's saying that part of the new finance bill that is coming out, that we are awaiting now, that finance bill of 2024 that will come out in the short time now, is that it is now mandatory that every account holder, either individual or company, must have a TIN number. That means that before, it is only applicable to company, that if a company want to open corporate bank account, they must have a TIN number. It can now be what? Extended to individual. When Finance Act 2024 come out now, it will be extended to individual. That means and that in his statement, he's saying that TIN number is now compulsory for both new account holder and the existing account holder. That means once they sign that Finance Act 2024, bank will now be sending message to all the account holder that your account may be closed, or your account will be placed on ZPND if you don't bring your TIN number. Every individual now must provide their TIN number to bank and company. It is now compulsory. Why? So that every month, bank, the part of the return bank render to FRS every month is by submitting information about their customer transaction. A bank submits it to FRS. It will show the name of the customer, the address of the customer, the amount of the transaction, so that FRS can trace such transaction, whether it's income, so that they can go and ask the taxpayer to pay tax. A lot of development is coming on tax of recent. There is a lot of development coming on tax. As time goes on now, you will be seeing that our tax collection, our personal income tax will be deducted from our bank statement, automatic, for every transaction we do. We'll be paying bank, or withholding tax will be deducted automatic from our bank statement for every credit to our bank account. There's a lot of development coming on tax. Why? Government need to generate more revenue, and there's need for government to widen the tax nets. In the sub-Saharan Africa, Nigeria, they are the ones that have the lowest tax to GDP ratio. People don't pay much tax in Nigeria compared to other West Africa countries. In the West Africa, our VAT rate is the lowest. What is the VAT rate in Ghana? Nigeria VAT rate is 7.5. As at this morning, I'm reading a news, National Assembly, they are contemplating of increasing the VAT rate to 10%. So, introduction of TIN number is one of the measures used by tax authority or used by government to curb tax evasion. Another measures used by government to curb tax evasion. Let's look at another measure. giving of tax incentive, granting of tax incentive to taxpayer. Granting of what? Tax incentive to taxpayer. For taxpayer that are complying with the tax law, once we see that this taxpayer is complying with tax law, in order to encourage other companies that are not complying to comply, those that are complying, we need to give them tax incentive. Under company income tax, there is a tax incentive that is called early payment of tax incentive. If you pay your company income tax before the due date, you will be given a discount of 1%, maybe 2% tax refund. That is early payment of tax. So, introduction of tax incentive, we reduce tax evasion, because when companies see that our government will give us discount, instead of government to collect 100 naira from our hand, they are saying we should come and pay 50 naira for so time, and after that time we pay the 100 naira. It will encourage so many companies to pay the tax at the right time, because everybody want to take advantage of discounts. So all these are the measures used by government to curb tax evasion. Another one, establishment of tax consultants. Sometimes this one is common, and this is another measure, establishment of tax consultants. Most of the state tax collected by state governments, personal income tax, road tax, entertainment tax, consumption tax, religious tax, all those tax collected by state government. Sometimes government use tax consultant to collect it, even at the local government level. So all these are the measures that is used to curb tax evasion. Now let's look at the measures that is used to curb tax avoidance. What measures that can be used to curb tax avoidance? Number one is dividend payments. Restriction of dividend payments to total profits. What this one means is that when a company pay dividend, they must not pay if they pay dividend from profit after tax. That dividend that they pay from profit after tax must not more than the total profit that the company will pay CIT on. If in a year the total profit is 1,000, company now pay dividend to their shareholder 3,000. If we want to compute the company income tax of the company, we will use 30% of that dividend amount, 30% of the 3,000. That will be the CIT the company will pay. That means we are going to assess the company based on dividends. The CIT of the company will be assessed based on dividend. So one of the measures that government used to curb tax avoidance is taxation of excess dividend. Taxation of excess dividend, or we can call it restriction of dividend to total profit. Restriction of dividend to total profit. We can call it. So those are one of the measures used by government to curb tax avoidance. Another measure used by government to curb tax avoidance is arm's length transaction. When a transaction is not done at arm's length, government will ensure that those transactions will government will get the market value of the transaction, and they will ensure that that transaction is charged at the market value. Another measure is turnover assessment. If a company does not have accessible profit, or the accessible profit will result into tax that is less than what FRS expected, in that case, FRS will tax the company based on turnover. They will pay CIT based on reasonable percentage of turnover. Another measures that can be used to curb tax evasion, tax avoidance, is transfer pricing regulation. Transfer what? Pricing regulation. Our next topic after this one will be on transfer pricing. Transfer pricing regulation. We need to regulate how intercompany transfer price, charge price on goods and services. FRS regulate them. Transfer pricing regulation started in 2012 when they signed Transfer Pricing Regulation Act. The whole essence of this act is to ensure that if subsidiary and parent company transfer goods between themselves, is to ensure that that price charge is at fair value. Is to ensure that that transaction is done at arm's length, fair value. So transfer pricing regulation is one of the measures that is used to curb tax evasion, tax avoidance. Another measure another measure that can be used to curb tax avoidance is what? Restriction of what? Capital allowance claiming. Restriction of capital allowance claiming. You understand this statement? You know, when you have excess capital allowance for a trading and service company, when they have too much of capital allowance, what will happen? We cannot deduct all the capital allowance from the profit, from the adjusted profit. We have to restrict it to how much? To what percentage? What percentage do we restrict capital allowance to? Oh yeah, now
66 to 10.
62 to 3rd percent. So that restriction is a measure that is tax avoidance. And how do we reduce capital allowance? We restrict it. Payment of minimum tax too is a measure to curb tax avoidance. Some company, they will incur some expenses that is allowable. But those expenses, they deliberately incur it because they don't want to pay tax, so that they will have loss. In a year that a company have a loss, does that mean that company will not pay tax? If a company have a loss, adjusted loss, and the loss is carried forward in that year, what will come to our mind? We say, can we assess this company based on what?
Minimum tax.
Based on minimum tax. Let's assess this company based on minimum tax. So payment of minimum tax too is a measure that is used to curb tax evasion. Another measure that is used to curb tax evasion is restriction of rent paid to employer by the employee, rent paid by employer to the employee to 100% of basic salary of the employee. If you are the CFO of a company, if your basic salary in a year is 5 million, if a company want to rent accommodation to you, the rent that the company pay on the other accommodation they rent for you must not more than 5 million. You know, that rent in the company account is an allowable expenses, but the rent must not more than 5 million. So it's a measures that is used to curb tax evasion, avoidance. Now, let's look at what are the measures put in place by government to enhance efficient tax administrator. What are the measures put in place by government efficient tax administration system? What measures government put in place that the tax administration system in Nigeria, according to the national tax policy, those measures have been stated in national tax policy. One of the measures is payment process and collection. Payment processing and collection. This one is saying that the payment processing and collection of tax should be based on technology. Tax should not be manual. Government should introduce a software that people can use to file tax return. Government should introduce a software people can use to pay tax. What software has tax authority introduced for filing of tax return and easy payment of tax? Who can mention the tax software?
Promise.
Tax Promise. Tax Promise. This number one payment processing and collection is referring to government should have a software. People don't need to go to tax office to go and be filing tax return, to go and be wasting their time. With like this time around now that fuel is about 1,002. Can you imagine? You'll be wasting your company fuel that I'm going to file tax return. No, we don't use that again. In your with your laptop, you can file tax return for your company once you know the login detail for the Tax Promise. Payment processing and collection also refer the use of technologies too has helped government so far to reduce their cost of printing. Can you imagine before in FRS, if you want to file for VAT, they will give us a paper, a form. That form has like 5 copies, 5 duplicate copies. You will now be filling it. And look at the cost of printing FRS have used. And you will see some company every month, because they want to obey the law, they don't have any turnover. They will now come, they will now say they want to file a new VAT return. FRS did not collect 1 naira from VAT from them. They will still file a new VAT return, still collect form, put 0. So, payment processing and collection. Record keeping is one of the measures to enhance effective tax administration. Tax authorities should keep adequate record of the taxpayer. The record should be well maintained and keep. And those records, they can keep it electronically. They don't need to be keeping a file. This is one file, all this file of tax return, printing. No. Most of the record can be kept electronically. Taxpayer record can be saved in where? We can save it in what? We can save it in cloud. All the record of taxpayer every year, we'll be saving it in cloud. Another one is exchange of information. Efficient tax administration. One of the measures is to enhance efficient tax administration. Exchange of information. Tax authority, they need to work hand in hand together. We should exchange information about our taxpayer. Ogun State Internal Revenue should exchange information with Lagos State Internal Revenue. If some people is claiming that they will not pay their tax in Lagos State, because they are residing in Ogun State, because according to personal income tax is based on residential rule. That means you pay your personal income tax to the state of your residence, state that you are residing. Some people, they may be working in Lagos, they're residing in Ogun State. In that case, they will pay their personal income tax to Ogun State. If Lagos State approach them that, why your staff, they approach the company that those people are working for, that this your staff, we have not seen his tax. If the staff say, it's a resident, if the company say, this person is a resident of Ogun State, you don't need to collect tax from it, you go and pay it to Ogun State. Lagos State should share information about that taxpayer to Ogun State, that so person is working in this company, is working in company XYZ in our state, but the person is your resident, is residing in your state, and it's you that's supposed to collect that. We just want to tell you that, we just want to remind you to collect us from it, because he has refused to pay in our own, because he's claiming based on residential rule. Lagos State will be giving information to Ogun State about their resident working in Lagos State, refusing to pay tax in Lagos State. That is exchange of information. In the context of international taxation, there is something called AEI, automatic exchange of information. Tax authority in one tax jurisdiction exchange information with tax authority in another tax jurisdiction. In one country, tax authority in UK can exchange information with tax authority in Nigeria. Enforcement of tax law. We should enforce tax law. If anybody fail to pay tax, and we remind the person that you have not paid your tax, so we have sent several notices. The person sees continue not to pay tax and is doing business, we can enforce. We can go and seal up the office. Adequate funding of tax authority is also one of the measures of effective tax administration. Tax authority, they need to be funded. The people working tax authority, they need to be very motivated. They should give them adequate remuneration. If they give them good remuneration, adequate remuneration, it will motivate them to do more work, to generate more revenue to government. So all these are the measures that is used to enhance tax administration system. So, ladies and gentlemen, let's look at a question. Let's look at a question. Let's look at a question. So somebody can help us read the question. Oh yeah, now. Question 1. Examinable question 1.
We
We
have
need a
just
volunteer to help us read.
let me read. We have just received an email from the senior manager of the tax division of your firm of tax consultants. The email, we have just received a memo from the audit and assurance division with respect to 2 of our clients. Curiously, the 2 companies have identical issues of dividend payment. The details are as follows. XYBLEX Nigeria Limited is a pharmaceutical manufacturing company located in Ota, Ogun State, Nigeria. It's a subsidiary of XYBLEX Pharmaceutical in Europe. At its recent board meeting of February 15, 2016, 2 resolutions were passed. A proposed dividend of 15 kobo per share, subject to appropriate withholding tax deduction for the year ended December 31st, 2022, to be presented to members at its annual general meeting of June 30th, 2023. B, that having obtained the parent rights for a new drug of Atrix called Atrix Tobex, the production is expected to commence in the 3rd quarter of the year 2023. 2. KRY Limited is a trading company located in Lokoja, Kogi State, Nigeria. The board resolution of January 29, 2023 proposed a dividend of 25 kobo per share, subject to appropriate withholding tax deduction for the year ended December 31st, 2022, to be presented to members at its annual general meeting scheduled for May 5th, 2023. It is essential to state that Jumbo Martins, the new trainee, did make efforts to determine the tax liabilities of the 2 companies, but these are to be properly checked. You have to review the computation by Jumbo Martins and come up with the correct position of the tax liability of 2 companies. It is also essential that you determine the adequacy of the proposed dividends by the 2 companies with the aim of making sure that they are within the provisions of the company's income tax act cap C2L LFN 2024. Finally, since XYBLEX Nigeria Limited is proposing to start production of Atrix bells in the 3rd quarter of the year, the managing director would like to present to the board the firm's opinion on pioneer products with specific reference to 1. Tax relief period and profits and dividends. Below are the relevant details in respect of both companies with respect to the year ended December 31st, 2022.
Okay. Required.
A. Compute the tax liabilities of 2 companies. B. Advise on the appropriateness of the proposed dividends with reference to the relevant provision of the law. C. Outline the tax relief period and the relevant provisions with respect to profit and dividends of pioneer companies. D. Briefly explain tax avoidance. 2. List 3 anti-avoidance measures put in place by government. Ignore double taxation measures.
Okay, thank you very much. So this company, they have 2 companies. In this scenario, they have 2 companies. One of the companies is called SYBLES. While the second one is called Crystal. One is a manufacturing company. SYBLES is a manufacturing company. While Crystal is a service company. Crystal is a service company. Trading company, sorry. They now give us the detail for the year ended December 2022. They give us net profit. They give us balancing charge. They give us investment allowance, profit on non-current assets, capital allowance, depreciation, net assets, turnover, paid up share capital, gross profit, revenue. They now ask us to compute the tax liability for the two companies. For us to compute the tax liability based on this information, we have to get adjusted profit first. When we get adjusted profit, we can now minus capital allowance from adjusted profit so that we get the total profit. So let's go and compute. The net profit, we start with net profit. In this question, for the two companies, the net profit of the first company, SYBLES, their net profit is 20,025,420. While for Crystal is 40,251,240. We add back what? Depreciation, because depreciation is a disallowable expenses. We add it back. Depreciation was given to us in the question. We add it back. What are we lessing? What are the non-taxable income? Do we have non-taxable income given to us in the list of items given to us? Which one is non-taxable income? Who can show me the non-taxable income here?
The profit on the sale of NCA. Profit on the
Again.
sale of assets.
We less it. We less the non-taxable income. Profit on sale of non-current assets. We less it. At the end of the day, we get adjusted profits. The adjusted profit for the first company, SYBLES, is 23,232,770. While the adjusted profit for Crystal is 47,501,840. In this illustration, after adjusted profit, we're supposed to less capital allowance. But before we less capital allowance, there is an opposite of capital allowance that we compute too. While we are computing capital allowance, that we get to, it's just like opposite to capital allowance. So, and he has a brother. That brother is relating to capital allowance. What is that? Balancing charge. We add balancing charge. We add balancing charge. You know, balancing charge has a brother. Who is a brother of balancing charge? Balancing allowance. Abi? You know, we can either get balancing charge or balancing allowance. When our tax written down value is more than the sales proceed, that is balancing allowance. Then when the sales proceed is more than tax written down value, that is balancing charge. Under our capital allowance, can we still remember? We add balancing charge. Yeah. In this question, we have balancing charge. We add it to the adjusted profit. After we add balancing charge, we can now less capital allowance. So Capital allowance. What are the capital allowance in this question? We have capital allowance for the year. And why computing capital allowance? It has before financial 2023. If you want to compute capital allowance, there are some 3 elements that we added together for getting capital allowance. What are those 3 elements? In some of the cases,
Investment.
initial allowance, annual allowance, and investment allowance. Investment allowance normally occur to plant and machinery, but investment allowance, according to financial 2023, it has been deleted. That means as from year 2024, which financial 2023 take effective, there is no investment allowance. But as at the time that we are doing this question, we have investment allowance. So investment allowance and capital allowance is still the same thing. We less 2 of them. First and foremost, I less investment allowance first. When I less the investment allowance, I now less capital allowance. How can I less the capital allowance? Look at the first one. SYLBLES is which type of company? Is what? A pharmaceutical manufacturing company. That means SYBLES is a manufacturing company. Look at the capital allowance of SYBLES. How much is their capital allowance? 18,329,700. The capital allowance for SY is 18,329,700. But it's a manufacturing company. We cannot restrict for them. We can claim all the capital. We can use all the profit for the capital allowance. Now, look at after we have removed investment allowance. Look at the profit remaining, 14,947,370. But the capital allowance is 18 million. That means we cannot restrict the capital allowance to 2/3 of this profit. No, because they are manufacturing company. We can use all this profit to claim all the capital allowance. That means all this profit, since capital allowance available is greater than this profit, that means this profit remaining will be used for capital allowance. So capital allowance for the year for SYBLES, the capital allowance for the year will be the profit. At the end of the day, there will not be total profit for SYBLES because the available profit has been used for the capital allowance. Out of 18 million capital allowance, we have 18,329,700 capital allowance. How much do we claim? How much do we claim? We claim what? 14,947,370. The difference between that 18 million and 14 million, what will happen to it? What will happen to the difference?
You carry forward.
It will be carried forward. It will be carried forward. You can see that difference will be carried forward. You can see the difference. Look at the capital allowance available under this manufacturing company, 18,329,700. Look at the capital allowance I relieved, 14,947,370. That means the capital allowance I'm going to carry forward is going to be 3,382,330. That is for the first company. For Crystal, the profit available is 48,626,840. But the capital allowance for Crystal in the question, how much is the capital allowance for Crystal? 19,684,850. I can claim it. I can claim all the capital allowance because we have enough profit. We cannot restrict for Crystal. Though Crystal is a trading company, we can restrict. But if we restrict to 2/3 of this 48 million, it's more than actual capital allowance. 2/3 of 48,626,840 is more than the actual capital allowance of 19,684,850. So there is no basis for it. There is no reason for us restricting, though we are allowed to restrict under Crystal because Crystal is a trading company. The only two companies we cannot restrict is which company? Which company we cannot restrict capital allowance? Manufacturing and what? Agricultural company. We can't restrict capital allowance. We can claim all the capital allowance. But for trading company and service company, we can restrict. So, but the capital allowance under Crystal is not enough. Is very, very small. There's no need for restricting. Assuming the capital allowance is greater than 2/3 of 48 million. That means we are going to restrict the capital allowance to what? 2/3 of 48 million. But the 2/3 of 48 million in this question is greater than the 19 million. So at the end of the day, SYBLEX don't have profit, total profit. Crystal has a total profit of 28,941,990. Now, how do we compute tax liability for the two companies? How do we compute tax liability for the two companies? How do we compute the tax liability? If I want to compute tax liability, first, I will compute the tax liability based on CIT, normal CIT rate. What is the normal CIT rate? If they want to pay company income tax according to the normal one, based on total profit, it will be 30% of your total profit. 30% of total profit. SYBLES don't have total profit. That means we cannot compute CIT based on total profit for them. But Crystal has total profit. We compute the CIT based on total profit for Crystal. CIT based on total profit for Crystal is going to give us 30% of that 28 million. It's going to give us 8,682,597. 30% of 28,941,990. It will give us 8,682,597. We have computed the CIT based on total profit. In this question, we have another way we can compute CIT. If we read this question, what other way can we compute CIT? What other way can we compute CIT? On dividend. Because we are giving the dividend that the company pay, that they pay for the two companies. Say, for instance, for SYBLES, they pay a proposed dividend of how much? 15 kobo per share. 15 what? Kobo per share. 15 kobo times number of share. How many share does SYBLES have? How many share capital that they have? Are we giving? Where is the share capital in this question? 100 million share capital. So 15 kobo times 100 million, that will give us the dividend that they pay. For the second company, Crystal, how much is the dividend that they declare? Crystal declared dividend of how much? 25 kobo. 25 kobo, what is the share capital of Crystal? 25 kobo times 120. That will get the dividend payment. So now let's go and compute the CIT. Anytime that they give us dividend that they pay from profit after tax, we have to consider, we have to check whether that dividend is more than the total profit. If the dividend is more than the total profit available, that means they will pay company income tax based on what? Based on dividend. They will pay company income tax based on dividend. So let's check. We are still under company income tax. We have computed the normal company income tax that is based on that total profit for the two companies. One don't have normal company income tax, but the other one has 8,682,597. Now let's compute the company income tax based on dividend. You can see 50 kobo times 100 million for SYBLES. The dividend that the company paid is 15 million. 30% of 15 million is the CIT that they will pay. 30% of 15 million is 4,500,000. For the second company, Crystal, how much dividend that they pay? 25. Number of shares is 120 million. 25, 120. It will give us 30 million. That is the dividend I paid. CIT, company income based on the dividend, 30% of 30 million. It will give us 9 million. Another way we can compute company income tax for this company is by computing based on minimum tax. Minimum what? Tax. What is the rate of minimum tax? What is the rate of minimum tax? For company, what is the rate of minimum tax? And how do we compute minimum tax? Minimum tax is computed on turnover. The rate of minimum tax is 0.5% for some year. Why for some year is 0.25%? As at this year, the minimum tax rate, which is half of 0.5%. So if you compute society based on minimum tax, society based on minimum 0.5% of their turnover, it will give us 337 for Crystal, 0.25% of 102,500,000, which is the turnover, it will give us 256,250. So the question now is that for SYBES, if they want to pay company income tax, what amount will HYBEN pay as company income tax based on all this computation we have done for company income tax? What amount? SYBLES. They will pay company income tax based on what? Based on, is it based on the total profit? Is it based on dividend or based on minimum tax?
dividends.
Based on what?
Total profit is nil. Dividend is 4.5 and minimum tax is 5 million.
Based on
So
dividend.
dividends.
They will pay it because dividend, the CIT that dividend produce is what? Is higher. What about Crystal? Let's look at Crystal. Crystal have CIT based on total profit. 8,682,000 based on their total profit. CIT based on dividend, 9 million. CIT based on minimum tax, 256,250. So there will be access to tax based on what?
Dividend.
Based on, but they have the normal CIT now. They have total profit now. They will be based on dividend, like you said. I agree with you, because the CIT based on dividend is higher than CIT based on total profit. It's also higher than CIT based on minimum tax. Do you understand? So that means the two companies will pay CIT based on dividend. Now let's go and compute education tax. Education tax is computed on what profit?
Sir, please, I have a question.
Okay, what is your question?
When you explain, you said in some years for minimum tax we use 0.25. Why some years we use 0.5? Please, can you tell us like from what year to what year are we going to use 0.25%? Or are we going to be giving what the rate to be used in the exam?
Finance at 2020 is the one that introduced minimum tax at the rate of 50%.
Okay.
And that finance at 2020, it want to start in year 2020. It want to start in year 2020. As at year 2020, most of the business encounter a lot of challenges. In year 2020, most of the business encounter what? A lot of what? Challenges. Due to what?
COVID.
Due to COVID. They now said, when they now want to sign that finance bill 2019, they want to sign it into law that will become finance at 2020. They now amend that because of COVID, in the next 4 years, 2020, 2021, 2022, in the next 3 years, in the next 3 years, year end 2020, year end 2020, year end 2021, year end 2022, year end 2023. That is in the next 4 years. No, in the next 3 years. Year end 2020, year end 2021, year end 2022. Those are the next 3 years. That instead of minimum tax rate to be 50%, 0.50%, because of COVID, the next 3 years, company will not do well because they are just recovering from COVID. Let's reduce minimum tax rate for them because of COVID. Let's put it half of 50%, half of 0.50%. Half of 0.50% is what? 0.25%. 0.25% is half of 0.50%. That means year end 2020, year end 2021, year end 2022, we will use, when we want to complete minimum tax, we use 0. What? 25%. But year end 2023, what rate are we going to use for minimum tax?
0.5.
0.5. From 2023 upward, we can use 0.5. Do you understand?
Yes, sir. But according to your solution, this is not for 2023 year of assessment. According to what you wrote there.
Year end.
Okay,
Which
yeah.
year end is my sister? Which year end is this question? Year end. Which year end is this?
2022. Okay, sorry.
Do you understand my point?
Yes, yes.
So that is that. Now, let's compute education tax. Education tax is computed on what? On adjusted profit. 2.5% of adjusted profit. What is adjusted profit for Crystal? For SYBLES is 23,232,770. That means education tax is 2.5% of this amount. For Crystal, education tax is 2.5% of this. We get our education tax. Apart from education tax, we can also get police what? Development levy. Police development levy is 0.005% of adjusted profits. When we get that, so we now add the three tax together. The total tax liability that the company will pay for SYBLS, dividend, CIT 4.5 plus education 580,089 plus 1,160. That means the total tax liability will be 5,081,981. Now, for Crystal, CIT based on dividend, 9 million plus education tax, 1,187,546. And police development levy, 2,375. Everything will give us 10 million, 189,921.
You know the way you ran through the changes in the rates for just a second.
I can't hear you.
Can you hear me now?
I can hear now.
I would like you to, if you don't mind, to run through the changes in that tertiary education tax. I know you have mentioned it before to get to where we are, just like what you did with this.
Okay. For tertiary education tax, before we are using 2%. Before Finance Act 2021, we are using 2%. Finance Act 2021 was signed into law, which is going to be effective in January 2022. In Finance Act 2021, they increased education tax rate to 2.5%. That means as from year end 2022, education tax rate will be 2.5%. Year end 2023, education tax rate will also be 2.5%. Finance Act 2023, which will commence in January 2024, increase education tax rate further to what?
3%.
To 3%. That means as from year end 2024, education tax rate is going to be what? 3%. In that case, year end 2021 downward, education tax rate is 2%. Year end 2022 and 2023 only, 2 years,
2.5.
2.5. But as from 2024 upward, up to, we don't know what Finance Act 2024 will say. You understand? But presently now is 3%. That means in year end 2024, if we want to compute education tax, we use 3%. If there is no changes on education tax in any future Finance Act, we are still going to be continue to use 3%. So hope you understand that.
Okay, thank you.
Okay. So that is it on this question. B part of the question said, you should talk about appropriateness, advice on the appropriateness of proposed dividend with reference to what? The relevant provision of the law. This question is telling you to explain that how does a company should pay dividend, and to what extent will a company, if they pay dividend, that dividend will be subjected to company income tax. So in your B part, you will let them know that if a company pay dividend that is more than total profit, that dividend will be subjected to CIT. The company will pay CIT based on dividend. You understand? In a situation whereby there is no total profit, or the total profit is less than the dividend. In the case of, you now explain that, in the case of SYBLEO, SYBEL, SYBLESO, their dividend in a year is 15 million. Their total profit is nil. That means their CIT will be based on what? Dividend. In the case of Crystal, you also tell them, the dividend of Crystal is 30 million. But their CIT, but their total profit is about 28 million. That means the Crystal will pay CIT based on dividend. You do that for Crystals too. That is what they want you to do in this B part of the question. C part of the question, what does C is saying? C part said, outline the tax relief period. What is tax relief period?
Is that not pioneer legislation?
My brother, thank you very much. Pioneer legislation. Tax relief period means the period that the company will not what? Will not pay tax on their profit. And according to the Pioneer Legislation Act, the tax relief period will run for
3 years.
3 years, Abi?
Yes.
With extension of additional how many years?
Additional 2.
Subject to what? That 2 years
Subject
is
to
subject
application. Subject to the
to
application to the
satisfactory
Nigeria.
performance
Yes.
of the initial period. Do you understand? Subject to satisfactory performance of the initial period. That is what they ask you for this tax relief period. C part of the question again said you should discuss dividends of a pioneer company. What can we say about dividend of a pioneer company? What can we say? During the pioneer period, if a company declared dividend from the pioneer profit, you know that pioneer profit is not subjected to tax. Abi, during pioneer period, the profit that
Yes.
company make is not subjected to tax. Abi,
Yes.
if they distribute dividend to shareholder, the dividends too that they distribute to the shareholders too
It's
will not be
exempt.
subjected to tax, to withholding tax in the hand of the shareholder. However, there is a clause. When a company during the pioneer period distribute dividends in a particular year more than the pioneer profits, maybe in one of the first year of the pioneer period is 2021, they make a pioneer profit of 5 million. They now distribute dividend of 7 million. You can see that the dividend that they distribute is more than what? Pioneer profit. That excess, the difference between that pioneer profit and the dividend, that is excess dividend. That excess dividend is going to be subjected to tax in the hand of the shareholder.
If they had retained earnings in that first year, and this the year they are paying dividend applies to the second year.
Yes. So that is what
If
they
they
are
had
asking.
retained earnings in the first year and the profit is short in the second year, but they are paying dividend in
No,
excess.
according to Finance Act 2023, when a company pay dividend from retained earnings, that dividend cannot be subjected to CIT. This question we did, we assume company is paying the dividend from profit after tax. They are not paying the dividend from retained earnings. You know, Finance Act 2023 said anytime a company pay dividend from retained earnings, you cannot say they should come and pay CIT based on dividend.
Yes.
In this question, we assume that the company paid the dividend from profit after tax. Do you understand?
Yes.
So that is that. So that is what we have on this question. Any issue, any query, any observation? Any issue, any query, any observation?
How many chapters do we have left to go?
By next week, we do transfer pricing, and we can do current issue in international tax. So that means we can close up by next week so that we can have time to read. Abi?
That digital tax, is it digital tax now?
Taxation of digital economy. Have you not done that?
I think we have.
We have not done
it.
that. Say we have done that or not.
We've not done
I
that.
can't. We've not done it. We've not.
I will look
We've
at what
not.
we have done so far, what we have not done. So the highest number of lecture we have more should not be more than 2, so that we have time to read. We have done a lot in this diet. We have done a lot. We have done a lot in this diet. So, but like I always advise our physical students,
Yeah.
you need to plan yourself. You need to start reading now. You need to start reading now. If you
There's
want to
another
read,
one you said you were going to touch. Whether it's a merger and acquisition or something like that.
I've discovered merger and acquisition now.
Okay, I think maybe you said it in Maybe it was
Tax
subsumed
implication
in
of
another
merger and
topic.
acquisition. Have I not talked about that?
Maybe I missed it too.
Oh,
I don't think
I've
so.
discussed that. Yeah,
I
I've
can't.
not talked about tax implication of merger and acquisition. Tax implication of merger. Tax implication of acquisition. Whether I talk
No,
about what is merger, what is acquisition. I also talk about what is reconstituted company. What is tax implication of conversion of partnership to limited liability company? Have I not?
no, no.
Ah.
No, we talked about reconstituted company in another topic. I think CIT and which other just trying to
So that
recall which
means
other
we have
chapter.
not
Yes,
done.
CIT.
Yes,
Ah.
CIT. Yeah.
So that means we need to arrange for time that we cover that up. Please, we
Yes.
have to do that. I've done that for my physical students in BI and Solo. So I thought we have done that since.
No.
We have not done that. So please, we will try and arrange on that. So our next class, we have to do two topics. Maybe we will do transfer pricing. Transfer pricing is theory. Is theory. We will do that, and we do merger and acquisition. Merger and acquisition too is theory, but it has one calculation, which I thought we have done. I thought we have even touched that. Since we have not touched that, we will do that by next week. So if we now have additional extra lecture time, we can now do taxation of digital economy and current issue in international tax. And we do regional integration. So we try and cover up. So
Regional
thank you very
integration
much.
is not the one we touched on when we were doing double taxation.
No, 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 no.
We
Regional
touched that one.
integration and Africa Continental Trade Agreement
Okay.
under
Okay.
international tax. You know, if you
Okay.
want to read if you want to read on advanced tax, there are some areas that question normally come out. Hydrocarbon tax is sure. Capital gain tax is sure. International tax is sure. In international tax, we have different topics. We have about 6 topics in international tax. At least 2 topic question will come from 2 topics under international tax. Number 1 under international tax is double taxation relief. Number 2, taxation of non-resident company. Number 3, base erosion profit shifting. Number 4, tax haven. Number 5 is tin capitalization. Number 6, regional integration and Africa Continental Trade Agreement. While number 7 is contemporary issue in international tax. That 7 topic I mentioned, at least 30-mark question will come out. But out of those 7 topics, it's only 2 that will come out. In last diet, which one? I think which area of international tax come out in last diet? About 2 areas on international tax was out, and it has 15 mark. So any area that we have not done in international tax, we have to do that.
So we've not done the regional integration and African
It's
and
theory.
contemporary issues.
Even if you don't do,
Okay.
if you
You can
don't
just
do it,
send the notes then.
I will send the notes. We have not done contemporary issue. I will send the note of contemporary issue this night. Transfer pricing, we will do that next week, and do merger and acquisition next week. So that is that. So thank you for having me. So thank you very much. We'll meet by
Thank
next
you.
week. Yeah.
Look at the heavy load of things to read.